What if I told you that the most important move in the global markets today hasn't happened yet, and by the time most people wake up tomorrow, the damage or opportunity will already be locked in? Tonight, while the rest of the world sleeps, Asia opens its markets, and this single opening session has the power to decide whether stocks bounce or bleed, whether gold explodes higher or gets slammed, whether crypto finds relief or panic. Here's the uncomfortable truth. Most retail investors only react after the move is done. The smart money, they're already positioning before Asia even rings the bell. And if you don't understand why the Asian opening matters, or what signals to watch, you're trading blind. Think about it. Every major market shock in recent years had the same early fingerprint. 2008, 2020, banking mini-crises, flash crashes, currency collapses. They didn't start on CNBC at noon. They started quietly, overnight, when Asia opened. That's why tonight isn't just another session. It's a decision point. By the end of this video, you'll understand why Asia often sets the direction for the entire global trading day, what institutional traders watch in the first 30-90 minutes, the warning signs that signal panic, reversal, or continuation, and how you can stop reacting late and start thinking early. This matters now because markets are sitting on a knife's edge. Liquidity is thin, volatility is elevated, confidence is fragile. When markets are calm, Asia follows the West. When markets are stressed, the West follows Asia. That's the shift most people miss. Right now, investors are confused. One headline says soft landing. Another screams recession. Rates are high, debt is exploding, currencies are wobbling. In moments like this, the Asian Open becomes the truth serum. It reveals what global capital actually believes, not what analysts say on TV. If Asian markets gap down hard, that's fear. If safe havens spike immediately, that's stress. If China, Japan, and Hong Kong diverge, that's a signal. And here's the scary part. By the time Europe opens, by the time New York reacts, the real money has already moved. So if you've ever felt like markets move against you overnight, if you've ever woken up to red candles and thought, what just happened? This video is for you, because tonight decides more than just tomorrow's open. It decides momentum, psychology, and direction. Stay with me, because in the next section, we're going to face the uncomfortable reality of how most people completely misunderstand overnight markets, and why that mistake keeps them consistently late, stressed, and on the wrong side of big moves. Let's be honest for a moment. Most people treat the market like a daytime event. They wake up, check prices, maybe read headlines, and then react. But the market doesn't care about your sleep schedule. Here's the core problem. Retail investors think the game starts when they're awake. In reality, the most important positioning happens when they're offline. Think about how many times this has happened to you. You go to bed feeling confident, charts look stable, nothing alarming, then you wake up, and everything has changed. Stocks are down 2%, gold has spiked, crypto is bleeding, the news suddenly has a narrative ready, and you're left asking, why didn't I see this coming? It's not because you're dumb, it's because you were watching the wrong clock. Here's the harsh reality check. By the time US or European traders react, Asia has already voted. Asia doesn't trade on emotions the same way the West does. It trades on flows, currencies, yields, and stress signals. Japan watches bonds like a hawk. China watches capital flight. Singapore and Hong Kong watch dollar liquidity. When something breaks beneath the surface, Asia is usually the first place it shows up. But most beginners make three fatal mistakes. Mistake number one, ignoring the Asian session completely. They assume nothing happens overnight. That assumption is costly. Mistake. Number two, overreacting to headlines instead of price behavior. By the time headlines appear, institutions are already positioned. Mistake number three, confusing noise with signals. Not every overnight move matters, but some matter a lot. And when you don't know the difference, everything feels random. This leads to frustration, overtrading, late entries, selling bottoms, buying tops. Emotion replaces strategy. The consequence isn't just losing money, it's losing confidence. You stop trusting your analysis. You feel like markets are rigged. You hesitate when real opportunities appear. But here's the truth most people never hear. Markets aren't random. They're sequential. Asia sets tone. Europe confirms or challenges it. The US amplifies or reverses it. Miss the first chapter and the story never makes sense. And right now, missing that first chapter is more dangerous than ever. Why? Because global markets are fragile. Debt levels are extreme. Liquidity is controlled. Geopolitics are tense. Currencies are under pressure. In fragile systems, overnight signals matter more than daytime commentary. That's why tonight's Asian Open isn't optional knowledge anymore. It's required awareness. In the next section, we're going to break down, in simple language, what the Asian opening actually is, why it moves markets, and how to start reading it without feeling overwhelmed. Let's simplify this. The Asian opening isn't just a time zone, it's a liquidity handoff. When US markets close, capital doesn't disappear, it rotates. The the baton passes to Asia, and this is where understanding structure changes everything. Asia's main players include Japan, Tokyo, China, Shanghai and Shenzhen, Hong Kong, Singapore, Australia. These markets open before Europe and the US. That means they're the first to react to overnight news. Bond market stress currency shifts global risk sentiment. Here's the key concept. The Asian Open reveals whether capital is seeking risk or safety. If investors feel confident, Asian equities hold or rise, currencies stay stable, gold and yen remain calm. If investors feel nervous, stocks sell off immediately. Yen strengthens, gold catches a bid, dollar liquidity tightens. You don't need fancy indicators to see this. You just need to watch relationships. For example, if Asian stocks fall and gold rises, that's risk off. If yen strengthens sharply, that's stress. If Chinese markets diverge from Japan, that's instability. Think of Asia as the early warning system. It's not about predicting exact prices. It's about sensing directional pressure. Another important idea, Asia often tests levels that the US and Europe will later expand. If Asia breaks support overnight, Western markets often follow through. If Asia holds key levels, panic often fades. This is why institutions watch the first 30-90 minutes of Asia closely. That's when real money shows its hand. Beginners think trading is about prediction. Professionals think in probabilities and reactions. Asia doesn't tell you the future, it tells you the probability map. Once you understand that, the chaos starts making sense. In the next section, we'll go deeper into what specific signals matter most and how real traders interpret them in real time. Now let's talk about what to actually watch tonight. First, market gaps. A gap down in Asian equities isn't just a price move, it's a message. It means traders were willing to sell without waiting for liquidity. That's urgency. Second, currency behavior. Watch the Japanese yen and Chinese yuan. A rapidly strengthening yen often signals bond stress, risk aversion, deleveraging. Currencies move before headlines. Third, gold and safe havens. If gold spikes during the Asian Open, it means fear isn't localized, it's global. Here's a mini scenario. Asia opens flat. Within 45 minutes, Japan sells off, yen spikes, gold climbs. That's not random volatility. That's capital running for cover. Another scenario. Asia dips slightly but quickly recovers. Gold fades, yen stabilizes. That suggests fear was tested and rejected. These moments tell you how aggressive or fragile the market really is. The goal isn't to trade Asia aggressively. The goal is to prepare your mindset for Europe and the US. If Asia screams danger, you don't chase risk later. If Asia shows resilience, you don't panic sell. That's how professionals stay calm. Next, we'll tackle the myths that confuse people and cause them to misread these signals entirely. Myth number 1. Asia doesn't matter unless you trade it. False. Asia matters even if you never place a trade overnight. Myth number 2. Only US markets move globally. That used to be true. It isn't anymore. Myth number 3. Overnight moves always reverse. Sometimes they do. Sometimes they start trends. The biggest mistake? Treating Asia as noise instead of context. Another mistake is overconfidence. One signal doesn't mean certainty. You're not looking for perfection. You're looking for alignment. When multiple signals line up, probability increases. Clarity replaces confusion. Here's a simple action plan you can follow starting tonight. Step 1. Stop ignoring overnight markets. You don't need to trade them. Just observe. Step 2. Track 4 things only: Asian equities, yen, gold, and futures. Step 3. Compare Asia to the previous US close. Did Asia confirm or reject it? Step 4. Adjust expectations, not emotions. Let Asia inform your bias, not force trades. Consistency beats intensity. If this breakdown helped you see markets differently, take 1 second to support the channel. A like tells the algorithm this content matters. A share helps others stop trading blind, and subscribing means you'll be ready before the move, not after. This channel isn't about hype. It's about awareness, preparation, and probability. We don't chase noise. We read structure. And if you stay here, you'll start seeing markets the way professionals do. Tonight isn't just another session. It's a signal. Markets whisper before they scream. Asia is where the whisper starts. When you learn to listen early, you stop reacting late. Remember this line, and let it stay with you. The market rewards preparation, not prediction. Watch the open, read the message, and let clarity replace chaos.